Well, let's get to our conversations now. And the Federal Inland Revenue Service recently directed persons holding accounts across all forms of Nigerian financial institutions to fill and submit a new self-certification form made available on its website. According to the service, the forms are required by the relevant financial institutions to carry out due diligence procedures in line with the income tax regulations of 2019, but haven't been received with immediate mixed reactions last week. The FRSC explains that the demand is not targeted at all Nigerians, but persons of interest. Well, to understand the objectives of this exercise, we're now being joined by the manager at Anderson Tax Nigeria, Emmanuel Onosami, for some analysis. Good morning. Thank you for joining us on the program. Well, let's start off with you giving us a sense of what the self-certification exercise aims to achieve and who are the people who are actually affected by the Common Reporting Standard regulations.
Yeah, thank you very much for having me. And to start this conversation, I would like to give a background to help our audience understand the Common Reporting Standard. And if you can recall the global crisis that happened in 2005 to 2007, that led the government of the world to start thinking again about how they could wrap up tax income for the purpose of governance. That led the government through the United Nations in cooperation with the OECD to commission a project that was called the BEPS Erosion and Profit Shifting Project. And one of the key pillars of that project is tax transparency. Before now, government realized that there are some taxpayers, because they are not physically resident in a location, they dodge the tax obligation in that location. So because of that, the CRS is one of the projects of the OECD that is targeted to ensure that there is tax transparency, among other reasons like countering terrorism, sponsoring, and other reasons. To explain this in a layman language, what the government of the world they are trying to achieve is that if you're not currently resident in a country, you are tax resident in that country, to ensure that you are actually discharging your tax obligation in that country. So I will say again, this is how it works. I could be a Nigerian and I'm resident in Nigeria, but I have assets in the UK where I put those property for rent and I earn income in UK. Although I'm not a UK citizen or a UK resident, based on that income that I'm earning from UK, there's an expectation that I meet some tax obligation. Based on that, the government of the world said there are so many leakages around these taxes and they are unable to track because there is no transparency around it. Similarly, in Nigeria, based on the Nigerian law, you are expected to pay your taxes based on your global income, meaning as a Nigerian, if I have income from the United States or have income from anywhere around in the world, I'm expected to pay tax in Nigeria based on that, my global income. But where there is no transparency about that income, the government potentially lose from some such revenue. So what does the CRS come to address? The CRS come to address where governments of the world put the multilateral instrument. So in 2017, Nigeria signed an agreement where they agree with the global community to share information about people in Nigeria that have tax obligation outside Nigeria with any relevant country and vice versa. Meaning Nigeria also will be receiving this kind of information for the purpose of tax assessment. So recently, Nigeria domesticated that law in Nigeria through the Income Tax Reporting Standard regulation, where the Nigerian financial institutions are primarily obligated to obtain this kind of information from our holders, share it with the tax authority, who will then forward it to the relevant country that is interested in such information. So that is basically how the CRS framework is expected to work. It's a tax transparency tool just for the purpose of risk assessment and not necessarily to tax the people further. Yeah.
Now, having given us that background now, how would you help us to understand the difference between the Common Reporting Standard and the transfer pricing?
So, like I said, transfer pricing is also one of the tools that the United Nations through the OECD is using to tackle possible tax evasion. Why transfer pricing speaks to the fact that multinational companies and putting related party transactions for possible tax advantage, but the CRS regulation is just saying that, look, I don't have a clear picture of where all your assets are, and I want to have information about it so that I can reconcile your asset with your tax history. So it's a simple risk assessment tool. Once I have information about your your assets globally, I can then reconcile that with your tax obligation wherever you have tax obligation. So the transfer pricing is one leg, trying to see the transaction of multinationals between sister companies to ensure that it reflects commercial terms, and not necessarily because they want to use it to achieve tax advantage, but the CRS, in order to frustrate purposes, are trying to give a clear job of the assets of taxpayers and reconcile this information with tax history of that taxpayer.
Now, for those who that's Nigerians in the diaspora who are now, how will they get to take in the exercise? Will the IRS have to set up registry points outside the country, as we saw during the BV administration?
Okay, so if I could provide some explanation on that, the federal government on its communicated we should walk into the bank, obtain the certification form, and complete it for the purpose of this reporting. So trying to provide ground how the CRS is expected. The Nigerian regulation completely that is in sync with the OECD standard that was set the purpose of this CRS regulation. And one of the things that the OECD has stressed is that this is going to be a systematic exercise. It's not just only Nigerians in diaspora that are required to report. Even Nigerians that are resident, according to the OECD framework, are required to report to the extent that you have tax exposure in other countries. So what the OECD standard has recommended is to break down this exercise into phases. So we have categories of account holders that are currently being reviewed, and the financial institutions are expected to report on them come September 30th, But there are some other categories of account holders that will be reported in later dates. We have May next year, and then subsequent years. It's going to be an annual reporting framework. And based on this, what is the OECD framework recommends is that the financial institutions are required to carry out a due diligence. So what that due diligence is supposed to do is for them to review the information that is currently domiciled with them, and if they are able to ascertain that any account holder has tax obligation outside Nigeria, then they can make a decision on that and report such account holder. Otherwise, they will then need to do equal self-certification exercise. That equal certification exercise means that the account holder, by him or herself, put it on the form and sign the obligation outside Nigeria, where it is that the financial institution not very information. So the way the OECD framework is supposed to work is when the financial institution review their records and they see that they need to decide on the information currently available with them, whether you are reportable or not, meaning whether you have tax obligation outside Nigeria or not, then they will then reach out to that account holder to complete the self-certification exercise. But because we are running out of time, and I understand where the government is coming from, that if we could get everybody to do it at the go, then it will make administration easy for the financial institution. But as of today, based on the OECD framework, for the people that will be reported in September, we are aware that the financial institutions have already reached out to these people. And what will also be good that the government can do is to just make it known to the people that they need to cooperate as much as possible. Because according to the OECD framework, where an account holder refuses to provide this information to the financial institution, the financial institution is expected to report this account holder to the government, which will then take it further for possible investigation or any other activity they want to do with that. So the big takeaway for Nigerians from this is that it's not an automatic reporting when you fill that form. When they reach out to you to fill that form, you are expected to indicate whether you are taxable in other jurisdiction or not. And based on that, they will make a determination whether you are going to be reported or not. But if you refuse to do that, then what you are telling the financial institution to do is to report you automatically.
Now, talking about the role of the financial institutions, now, of course, we know that this exercise cuts across all of them. That's talking about insurance, brokerage firms, mortgage banks, discount houses. What's the significance of the broad spectrum of registrations?
So the entire idea is that if you have assets, you will definitely be keeping it with the financial house. you know. And the tax authority ordinarily will not have purview over this asset, but the financial institution. And that is why, based on the framework of the CRS regulation, the financial institutions are a key stakeholder that will help in ensuring that they achieve the objective that the United Nations and the government of the world seeks to achieve. So the financial institution, if you are keeping deposits, if you are managing asset, managing portfolio, you are managing trust, these are potential avenues that people can keep their assets and such that is not visible to the tax authority. So if you find yourself as a financial institution, then covering all these kind of services, then you will definitely be required to comply with this regulation. And to my understanding, the people that are primarily obliged under the regulation are the financial institution. And if you fail to do this, there are consequent penalties for not complying.
Now, these are pretty tough times for the economy, especially caused by the COVID-19 pandemic. And of course, the nation is looking for ways to increase revenue. So how will this exercise enable the FRSC to broaden the country's tax net?
Yeah, and that's primarily one of the objectives, The exercise is seeking to close the tax leakage gap that we currently have. If you look at it from the perspective of the FRS, there are Nigerians that could have filed their tax reports, annually based on limited information that the limited activities that they have within the country. And if you submit that with the tax authority will simply rely on that for the purpose of your tax assessment. But with this framework, once it goes live, Nigeria is then going to also be receiving reports from other countries about other Nigerians that have accounts outside Nigeria and have other income that are supposed to be taxable in Nigeria. And for that purpose, if the taxman mines this information very effectively and efficiently, it is expected that you are going to further widen the tax net and then further even increase the potential of collecting more taxes that is required for governance.
Well, do we have any idea how much could be realized in taxes from this exercise?
Today, very luckily, an international media released a report on United States FinCEN, Financial Crimes Enforcement Network, claiming that there are some of the big banks that have been assisting people to layer some funds and all that. And those are part of the consideration that the CRS is trying to address. The potential cannot be quantified, but for you to be able to have information about everybody that is subjected to tax in your country, then the potential will only be realized where the tax authority in Nigeria puts in place framework such that it's effective to analyze the data that are being shared and pursue those people that they think in their assessment have understated their income for the purpose of taxes. So the potential is far-reaching to the extent that the tax man is able to mine this data that are going to be shared under the CRS framework. Yeah.
Now, one question many have asked is that why is the FRS not leveraging other existing data and identification silos, or better still, partner with the other sectoral regulations to obtain this data?
Thank you very much for that question. And I would like to respond this way. If you understand that taxation matters are evolving and they are developing. We've seen in the social media space where people are saying, why can't you integrate the BVN with other data of other agencies to get this information? But today, in developed country where you have this kind of information, they've been able to aggregate those data and then limit the exposure to get reaching out to account holder to fill the self-certification form. But in Nigeria, if you look at it, even when they are doing when we were going about the BVN exercise or any other regulatory agency exercise, there is no aspect of that exercise that requested that people should complete information about their tax exposure outside Nigeria. So if you understand the CRS framework and now what they're trying to achieve, you will see that this self-certification exercise, where the bank deemed it necessary, is unavoidable, and people should just primarily cooperate with the financial institution to the extent that they have obligations outside Nigeria.
All right, we'll have to leave the conversation at this point. Manager at Anderson Tax Nigeria, Emmanuel Onosami, thanks for coming on the program.
Thank you for having me. Thank you.
When we return in just a moment, we'll be analyzing the World Bank 2020 Human Capital Index reading. Do stay with us.